What's up, everybody? It's Dusti Martin with Platinum Living Realty, dropping in to give you your monthly market update for the city of Scottsdale. It is currently August 2nd, 2022. There's been some big changes in the market, but not all price points are seeing the same shift. So buckle up, let's go, grab a drink, hit the subscribe button, and let's dive right into it. All right, so in Scottsdale, our active listings are up over this time last year, 107.4% over this time last year. That's a lot. Unfortunately, for most price points, it's still not enough. So most price points are still in seller's market territory. We'll get to that later. Wait till the end. Our sold listings are down 47.9% over this time last year. So we're seeing a little less activity. Part of that has to do with things are back to normal for the most part around not just the country, but around the world, and travel has been opened up. But then also we're starting to return to a more normal market where a certain amount of sales happen every year. The last 2 years, it's been really, really pronounced and way above what normally happens. And when money's basically free, a lot more people can afford to buy a home. So now we're getting interest rates back to a more average, normal price point. Although I know a lot of the millennials and young adults who are just now coming into home buying age and maturity, a lot of them have been really become accustomed to historically low rates. And you guys got to keep in mind, the rates that we've had the last couple of years are not normal. They're not standard. They are not the norm. And so we had a couple golden years. It's over now. We're back to normal. So keep that in mind. Then our median price per square foot, though, is up 21.9% over this time last year. Now, I know a lot of people are seeing things that say prices are dropping. Well, here's the thing. Yeah, the price, the listing price that a seller is offering their home for is dropping. But I did some analysis before the end of the month. So, at the time, I think it was July 27th, we still had a couple days to go. I looked at every home that was currently still active or coming soon on the market. There was 608 of them. Out of all of those 608, about 15% of those had shown price reductions. And the one thing I was really finding when I would click in, go look at the actual detail of the listing, I was finding a lot of really gross overpricing. So when we're seeing prices drop, I mean, they're dropping back down to a more reasonable level, closer to where the comps for that home are. The aspirational pricing that some sellers were seeing last year, where they would price a home $50,000 or $100,000 over the nearest comp, those days are gone. And to be honest, they didn't really work that well back then. So you have to get back to remembering that when you have less than 4 months of supply, there should be gentle upward pressure on home prices and home values, not shoot for the stars type pricing. So keep that in mind. So we're still seeing about most of those homes, our average list to sale price ratio in the valley still is over 99%. And most of that, and they're selling pretty fast. So that means that if they're priced appropriately, then they are actually selling, and they're selling quickly. The other trend I noticed, not only with the gross overpricing, but I found that a lot of people were so antsy and so used to things selling in 2 or 3 days or a week that some people were dropping prices in a week. And again, even in a normal seller's market, that wouldn't have been normal either. So you got to remember, it takes more than a week to sell your home in most cases. And we can talk more about that at a later time. But our home values, where homes are selling compared to where they sold last year, is still up almost 22% over this time last year, 21.9 to be exact here in Scottsdale. And Scottsdale's actually seen more gains than other parts of the valley. So keep that in mind. Now, I know that it's not the 50 or 60% that we were seeing in some parts of the valley last year. And a lot of people are like, oh, that's horrible. Yeah, but normal appreciation should be 2 to 4%, not 20 something. So keep that in mind. Yeah, we're down from last year, but last year was bananas, for lack of a better term. So we're still kind of bananas, to be honest, to put it in perspective in terms of our home values increasing and where homes are selling. It's just some people are like purple bananas, and other people are yellow bananas, if that makes sense. So then we're going to look at our months of supply. That's also up 297.8%. That sounds like a scary number, but we're still at 3.99, just like a hair inside seller's market territory overall for the entire city of Scottsdale. So 3.99. Last year, we were at a 1 month supply. During the summer, that's not normal in Arizona. It's also not normal to have such a high income and high priced home value area to be in a sustained market where there's only a 1 month supply, or even in a few locations, like only a week or two. And this also takes into account all property types in all price ranges. So for the most part, this year, it's still a seller's market by 0.01%. But we need to remember that we won't know where things are really headed. And we're not even back to like a stable market. We might be heading there. And that's the Fed's goal, is to tamp down the inflation and get people to like chill out for a minute. That's the goal, is even stable markets, right? But we're talking about the real estate market, and we're talking about our local market. So this is what's happening or happened this past month here in Scottsdale. So we're still there, but here's the crazy thing. Our median days on market is up 17.9%, which is to say just by a few days. And so our median days on market is still only 33 days. Remember, it takes 30 days to close a loan. So basically in a month, if your home is marketed and priced appropriately, it should be gone, even with that 4 months of supply. And so if we had an even stable market right at 6 months of supply, our days on market would be about 90 days. And that meaning that in about 90 days, you should have your home listed, under contract, and closed, right? We're still at 33 days, about the time it takes to close the loan. So that tells us if homes are priced right, they will sell, and they will sell quickly. That's the main thing that people need to remember, especially when they are looking at their home values, if they're thinking of selling. If the home is not priced right, if the home and the price are not compelling, it is not selling. Buyers, they actually have to pay interest now. Money is no longer almost free. So keep that in mind. So let's go over and let's look at our months of supply by price point. This is important if you're looking to sell, because you know how aggressive or soft you need to be on your pricing. But then you also, if you're buying, you need to know what you're up against and not be giving away the farm if you're in a different market than another price point, right? So you don't want to overcommit. You don't want to overoffer. But you also, if there's going to be multiple offers, you need to know about it. Okay, so like I said, our overall months of supply is 3.99. Then we look at the $0 to $100,000 price range. For the first time in I don't know how long, we've actually had inventory in that price range, and we're at a 3-month supply. That's actually a really good place to be. It's a healthy seller's market, but it's not absurd. And then buyers in that price range, they might see 1 or 2 other offers to compete with, but it's not going to be the 5, 10, 15, 35 type offers. And granted, the last listing that I put under contract, it was in the lower price point, not this low, but I found a lot of the investors are no longer willing to pay over list price. So I actually had an FHA buyer win the bid on one of my listings simply because they didn't try to shortchange the seller in any way. They offered the best that they could do, and they didn't write in a bunch of weird terminology where a lot of the investors are trying to get things under list price simply because they're out to make a profit. And if they know that it won't sell over a certain point, they don't want to pay that, right? So then let's look at the $100,000 to $200,000 price range. 3.5 months supply, again, seller's market, but not absurd, not crazy. You can probably take your time to go see a few homes. You don't have to make a decision like right that second on a home. Then we look at the $200,000 to $300,000 price range. This is hotter, but this is also where you find the more desirable properties in Scottsdale. You're looking at 2.78, so a little hotter still, still a seller's market, still very strong. Then the $300,000 to $500,000 price range, that's really like kind of the entry level starter home in Scottsdale. You are looking at 2.76, so 2 months and 3 weeks. So was that 11 weeks of supply? That's really not a lot in the grand scheme of things. It's still a very strong seller's market, but I would prepare yourself for multiple offers, just maybe not the absurd amount. You'd probably be looking at maybe 2 or 3 others. And then let's go down to the $500,000 to $700,000 price range. Again, seller's market, 3.2 months of supply, not as hot as the lower price ranges, but that's okay. It's not bad. Then we get to the 700 to $1 million, and we're finally back into a more normal, stable months of supply. We're at 4.54. In other words, 2 weeks of inventory outside of seller's market territory. So it might slightly favor a seller's market, but chances are you're going to be able to really work a deal. You're not going to have to give up appraisals and inspections and things like that. At the same time, sellers need to kind of get with the now and realize that the heyday, the boom, the gold rush is kind of over. And so if you want to sell, you need to be the prettiest property in the neighborhood at the prettiest price, right? So then let's go down to the $1 to $3 million price range. And oddly enough, this month, Scottsdale had the most listings in the $1 to $3 million range. So this is actually the biggest bracket for Scottsdale now, and it's at 4.07. So it's like literally straddling the line, tempting a seller's market, but it's not quite there. So keep that in mind. And you got to price appropriately if your home is in that price range, but also if you are a buyer in that price range, try offering just a smidge less. Let's not get absurd. Let's not get insulting with your offers, but maybe offer 98 or 99% of list price as opposed to 100%. Right? That's what you should be looking at. And then over $3 million. This I've found across the board in most places around the valley took the biggest hit, over $3 million. And we are currently at an 11-month supply. In Scottsdale, over $3 million, you are well into a buyer's market. So if your home is in that price range and you're trying to sell it, you need to make sure that you have the lowest price. Your house is the best because you need to be convincing those buyers to pick yours over a bunch of others. Now, part of that is a lot of investors that have invested in properties in that price range the last few years. Those have appreciated enough. The stock market isn't doing so good. And what did I say at the beginning of the video? Real estate is a long-term investment that hedges against inflation. We're seeing a lot of inflation, and our home values have way outperformed inflation. So keep that in mind. So there seems to be a trend across the country, and time will only tell if it will stick here in Arizona, because like I said, we're in our summer slump, and this price range, it is not uncommon to see really high volatility. 1 month will be in a seller's market, the next month will be in a buyer's market. So you kind of really got to watch this price range, and you have to dial it down to specific neighborhoods if you're really serious about selling a home. But at 11 months of supply, like that's a pretty big swing, because I'm pretty sure that last month, I'll have to go back and look, but I'm pretty sure we were really close to being in a seller's market for this price range last month. If not that, then at least an even or stable market. So that might have something to do with the fact that a lot more homes came on the market, maybe because some people are trying to cash out on their investment. So keep that in mind. Not to mention, with interest rates back in a more normal range, there's a lot less people that can afford a $3 million home or more. And keep in mind, in Scottsdale, we get listings that are 10, 12, 15, 26, $56 million. So keep that in mind. This is for everything over $3 million. If you want to know like what the price range for your home, what's happening in just your, say your home's like 5 million, not 50. then that's a different discussion that we should probably have, because the $5 million buyer is not a $50 million buyer. So keep that in mind. If you have any questions about what is happening in your neighborhood, or if you want to see what it would take to get your home sold and for about how much you can expect, or if you're looking to buy and you're wondering if the neighborhoods you are looking in are competitive or not, go ahead and give me a call at 480-717-9405 or visit my website at dustymartinrealtor.com.